Hello, we are Group 5, including four members, Nguyên Anh, Hải Linh, Minh Ngọc, and Anh Minh, are holding the presentation about the Treasury Management Report of one of the currently well-known bank in Vietnam, the TP Bank. In this report, we are going to discuss the first, macro situation, the secondly, banking industry environment, the TP Bank in general, and the scenarios and hedging proposals that we made. We come to the first part, the current macroeconomic situation. The Vietnam economy in 2020 showed both positive and negative signals. In the context of COVID-19 pandemic, Vietnam's GDP was 2.91%, which hit a record low over the course of 10 years. Specifically, the unemployment rate for the year was 2.48%, decreasing 0.31% year on year. The FDI counted up nearly $20 billion, representing a decline of 2%. On the other hand, Vietnam's export and import turnover grew by 5% and inflation rates reached 3.51% in the first 11 months of 2020, still below the expectation of the National Assembly. Thanks to the efficient containment, Vietnam's economy was in recovery and be the fourth biggest economy in Southeast Asia. The second part, the banking industry environment. For the market share, despite the fact that TP Bank is in a group of small-sized banks, it was marked as the only bank with a compound annual growth rate of total assets of over 20.3% and a market share of over 1% in 2020. In the money market, for the SBV, in order to improve liquidity and to ensure economic recovery under this complex situation, several monetary policies were cautiously implemented by the state bank in 2020. The first one was to reduce the benchmark rate 3 times with a gross decrease of 1.5 to 2.2%. Moreover, the money supply was actively and appropriately adjusted through the means of open market operations, or the OMO. About the TP Bank, the overnight interbank rate is determined by the range of factors. Therefore, to make good investment decisions, the bank forecasts market interest rate fluctuations and the fund management capabilities. Introduction of TP Bank, the bank that we are making the perform of analysis. The TP Bank, also known as the Tin Phong Bank, is a commercial joint stock bank founded on May the 5th, 2008. TP Bank has become one of the top-notch joint stock commercial banks in Vietnam. The main service of TP Bank are generally common to other banks, which are related to deposits for specific purposes, loans and payments. Liquidity. Regarding the data, TP Bank's liquid assets has been increasing remarkably over the course of 5 years. The reason for this upturn is that the number of new accounts and cards opened via the Live Bank system in 2020. From 2016 to 2020, the loans to deposits rose steadily from 48% to 75%. The total liquid assets on total asset ratio were lower in 2020, retaining fewer liquid assets. The total liability and over the total assets increased over the 5 years, which also showed a sign of raising liquidity risk. The cumulative liquidity. This table records all the cash flows, inflows and outflows in the residual maturity, showing a liquidity deficit in the bank industry in general. With a lack of deposits in the short term and a high demand for cash, TP Bank needs to increase the liquidity of the cash flows. Credit. Rated by Moody. TP Bank was rated B1, B2 in 2018. The high non-performing loans represent a negative impact on future earnings because these loans are no longer profitable or the profits are negligible. This indicator is less than 3% considered safe. From 2016 to 2019, the NPL fraction has increased by 0.59%. However, 2020 witnessed a significant decrease in this proportion compared to the last year of 1.18%, which demonstrates the bank's efficient credit risk management. With its low NPL index, in 2020, TP Bank was placed in the top 70 strongest retail banks in Asia and the top 4 retail banks in Vietnam as voted by the Asian bankers. For the risk provisions, the significant growth of provisions indicates that TP Bank in recent years developed considerably in financial activities. The potential debt ratio of TP Bank is always smaller than 1%, which shows that it keeps credit risk at suitable level. At the end of 2020, the potential debt ratio is only 0.36%. Thus, the percentage of provision required also declines considerably. Next, the part of capital management by the TP Bank. The bank capital represents the net worth of the bank or its equity value to investors. It protects the banking creditors in case they have no liquidate their assets. First, the core capital ratio or the Tier 1 ratio is at least 4% of the overall risk-weighted assets. The second is that the gross capital allocation is at least 8% of the overall risk-weighted assets. Throughout the 2016 to 2020 period, the Tier 1 risk-based capital ratio was carefully managed. During this phase, TP Bank seemed to unfocus on the supplementary capital, making the ratio look not potential. However, in 2018, a remarkable improvement has been achieved by TP Bank as it started to increase their both Tier 1 and Tier 2 capital, resulting in mounting CAR at 9.67% in 2018 and 10.69% in the most recent year. This occurred as a result of TP Bank's huge efforts to accomplish the international standards for financial institutions Basel II. The Basel II operates based on the 3 essential pillars: the minimal capital requirements, the regulatory supervisions, and the market discipline. These pillars seem to be no hurdle to TP Bank. In 2018, taking advantage of the opportunity when there were no or few banks able to meet the standards given by the Basel II, TP Bank hit the domestic market as one of the first banks to fulfill all the requirements of the Basel II in a short period. The next part of our presentation is going to be presented by Big Ngọc.
Okay, now here comes to the interest rate risk. The interest rate risk measurement using TCAP is based on the pre-pricing model, also known as the interest rate sensitive gap model. From 2017 to 2020, the TCAP is still greater than 0, which means the bank was exposed to a positive interest rate sensitive gap or an asset sensitive gap. It can be seen that in the change in net interest income of TPB significantly increased over the course of 3 years. The expansion of digital life bank was in line with the bank development and it pushed the interest rate of the year after and at the same time accelerated the change in net interest income from negative of over 23,000 million Vietnam dong in 2017 to positive 56,000 million Vietnam dong in 2019. In 2020, for the short term, the dollar gap is mostly negative. So when the interest rate rises, the net interest income decreases and vice versa. For the long-term account, the interest rate will make net interest income increases. Now we come to the scenarios analysis on the impact of income and capital. First, for the impact on income, the market under the COVID-19 hit has experienced several unprecedented volatilities, raising concerns about the impact of interest rate on the income and capital of commercial bank. Based on the ongoing tense and complicated circumstance, it is predicted that in the first half of 2021, the interest rate will drop by 1 to 2% and are attributable to the public's money demand. However, in the second quarter, the interest rate have a tendency to increase due to some reasons, such as restricting tools to buy foreign currencies or the rapid growth of the credit. About the impact on capital, the income derived from services and other has become the focal point, and credit activities have reduced its attractiveness. According to SSY, the total common bonds issued by commercial banks increased by nearly 70%, reaching about 207,000 million in the third quarter of 2020, in which the TPP's growth was the strongest. The EPS ratio have a quadruple over the course of 4 years, where the index in 2017 and 2020 was 1,649 Vietnam đồng and 4,208 Vietnam đồng per share respectively. Based on this information, a price future is opened for the Tiền Phong Bank. We come to the final part, hedging proposals. Hedging is a financial strategy created to minimize the risks associated with the certain securities and to ensure a profit by using hedging tools in terms of derivatives such as forward, swap, and option contracts. With the forward contract, suppose that TPP buy 10 million Vietnam dong of 5-year government bonds. Bonds are usually priced at fair value and the year to maturity is 5%. If the epidemic continues to last, thus making the rate decline in the long run, the future price of such bond would increase and result in significant capital losses. As a result, the bank partners will with another group say XYZ Corporation to offer 10 million Vietnam dong bond in government bonds at the rate BA. A currency swap is a transaction consisting of at the same time buying and selling the same amount of one currency for another, in which the maturity of two different transactions and their rate is determined at the time of signing the contract. There is an assumption to clarify the swap contract issue. The difference in net comparative advantage is divided equally between banks following the example in this slide, and we also represent the outcome. Finally, option contracts were offered by the TPP since 2013 and have become an effective derivative commodity to hedge against the exchange rate risk. About hedging against the liquidity risk, in the first 3 months of 2021, credit growth were 0.41% and Vietnam economy showed signs of recovery from the COVID-19 crash. In the case that the pandemic was controlled accurately by Vietnamese government, thus the economy would recover and might lead to an increase in interest rate in the near future. The TPP's net interest income may be negatively affected because the bank's DCAP is negative in the short term. To avoid this situation, the bank should consider keeping more liquid assets, for example, holding money instruments or including bar cash. Hedging against credit risk. As we know, the epidemic contagions tend to accelerate the credit risk as the bank's customers fail to perform their obligation as committed. Indeed, the unemployment rate hit a record high since the COVID-19 pandemic appeared, which demonstrates the bankruptcy of several businesses. In order to manage credit risk, the bank is utilizing tools in this line. And these policies are carried out by the board of directors and the AMCO. To the conclusion, in terms of treasury management, the TP Bank has shown their proficiency and valuable strategies in managing company assets and liabilities, expressed in the percentage results that they achieve. The TPP started their business later than most domestic competitors. However, the fact has no influence but be a motivation for the bank to continuously improve and assert their strength in the market. And that brings us to the end of our presentation. Thanks for watching and listening.